Welcome to What School Should Have Taught You. This is a podcast where I share with you all of the lessons to build true wealth. I'm Iannuzzelli, and this is a time that we're going to be discussing about evaluating your options. Now, we've got a very special person on the line that we'll be bringing on very soon, but I wanted just to introduce you to this particular topic because it's a conversation and it's an issue that I see a lot of times in the industry, and my role as an accountant is to really break through these barriers and really give people all of the opportunities to evaluate their options. We've got a person on the line who's been a listener of the show wanting to ask a couple of questions because their situation's very much similar to what we'll be discussing today. If you have any questions, feel free to head over to our Instagram and ask any questions that you want, and we'll see if we can get you on to see if we can assist you with any of the questions that you currently have.
Everything school should have taught you in one place. With a property portfolio of over 17 million and an accountancy firm of over 16,000 clients, as well as being an accountant to some of the wealthiest people in Australia, Iannuzzelli will be sharing his lessons on everything school should have taught you so you can build the life you want.
I wanted to share with you the topic today and where we could potentially assist this gentleman with some questions that he has. But today's all about evaluating options. And I see this so many times inside the industry. People have built up a little bit of savings and they're at a crossroads in life. They're not sure what they need to be doing next, who they need to talk to, or even how to get started. Now, we spoke about in prior episodes that what old school money does and what wealthy people do so well. And the first part of that topic was all about going. It's all about taking action, making a decision and moving with it. And with this call today, we're going to be discussing his particular situation, and we're going to be sharing some opportunities and hopefully some ideas that we can come up with to help this young man along his way, start evaluating his options and himself taking some action moving forward. We've got Jarrod on the line now. Jarrod, are you there, mate?
Hey, Jeremy. Thank you so much for having me on.
Mate, absolute pleasure. Thank you very much for coming on, and I really appreciate you willing to share your story today, and hopefully we can really understand a little bit more about yourself and your situation and help you evaluate your options so you've got some ideas to move forward and start taking your action. But before we do, I'd love to know a little bit more about yourself, Jarrod.
Absolutely. So I'm 23, and I just recently started working part-time because I'm a little stuck. Now, a couple of years ago, I taught myself to trade, and I found a little bit of success with cryptocurrency and some other little bits and pieces. So I came with all things said and done with about $100,000. And since then, it's not done a whole lot. Now, my goal is to work for myself and start a business, but at this time, it's a lot of analysis paralysis. I'm a little indecisive with what I'm trying to do. And someone really close to me is really keen on me starting my investment journey and buying a property. But with all that considered, I'm not totally sure which road to take.
Mate, thank you very much. And look, what you have right now, you should be very proud of yourself, mate. Well done on building up that capital balance. And, you know, at 23 years of age, $100,000 that you currently have in investment there, and you've got a substantial amount of opportunity ahead of you. And, you know, well done for having a little bit of a think, taking the entrepreneurial path and wanting to start your own business. You should be really commended for that so far. Now, you spoke about that you wanting to start your own business. You also spoke about you have a very dear friend of yours who's pushing you down the property path. Can you just share with me a little bit more about the business that you're wanting to start, or where's your passion?
So I do have a passion for content creation, and that's another reason why I started this part-time job, because it's in that field. And one of the avenues that I wanted to start using my content creation skill was with 3D printing. So learning to 3D print and using my content creation abilities to advertise those products so they'll be easier to sell.
Well done.
So I have purchased my first 3D printer and I've started working with that. But at the same time, it's like, is the business plan in place? Do I know where to take it? A lot of questions that I think I need to answer still.
Yeah, mate. And they're all common things, right? And it's fantastic that you've already started to take your first couple of steps, you know, getting that 3D printer in place. I think it's ideal. What you're going through, many people will go through that same thing. So don't feel that you're going through this alone. There's lots of people that I speak with on a daily basis who are unsure what step to take, and sometimes they need a little bit of confidence or maybe a push in the right direction. Ultimately, you need to make sure that, you know, you've mentioned you got to get that business plan in place, and I think that's an ideal way to start. Now, we'll talk about a couple of things, Jarrod, and we'll see if we can get you moving in the right direction. Number one, you've built up this $100,000. It's currently sitting in a bank account or currently still sitting in shares or an asset. Where's it sitting at the moment, mate?
So I have a buffer in my bank account, which is earning about 5.8% interest yearly, and I have the rest sitting in a couple Vanguard ETFs.
Beautiful. So you've got it in what I would say probably a very low risk investment, which is ideal.
Yep.
And it's quite liquid. So you've got the opportunity that you can extract that money out of that investment at any time. Now, I love the idea of your 3D printer, and content creation at the moment is a massive industry. It's probably one of the things that we all see on a daily basis, regardless of what we do. We all carry our phones, and there's a lot of content there now on Instagram and Facebook and TikTok and all the other softwares alike. So the great thing is you're in an industry that is, I believe, still at its infancy, and there's a far substantial amount of growth left in the industry. So you've got to really take advantage of that, and you're in the right position to capture that as well. Now, your 3D printer, you've purchased it. And let's talk about a couple other things as well that I want to bring up today around the property side of things. Now, this person who's really pushing you down the property path, what have they spoke to you about in terms of looking and researching about properties? Is that something you've started the process yet, or not really?
Yeah, so he's found a lot of success investing in property, and of course wants to share that success with everyone he knows. And being so young and early, he thought that it'd be a good opportunity to get my first investment property, looking at that lower price range between, 100 to 150,000, even lower potentially. But yeah, I'm not totally convinced if that's the best move right now.
Beautiful.
I definitely want to get a portfolio ready and going as quickly as possible, because the earlier we get involved, the quicker those compounding growth can start moving. But I'd be asking, is that the best choice for me right now in my current situation?
And what's your current income at the moment, Jarrod, if you don't mind me asking?
So with a part-time job at the minute, it's probably about $30,000.
Beautiful. All right, I'm going to probably come up with a couple little things for you to have a think about. Number one, with your income being about $30,000 to $40,000 working part-time, what doors open to you in the property side of things is not a huge amount. And I'll explain why. It does require you to borrow a substantial amount of money to probably buy the right asset. Now, you can, with that $100,000 and also with your part-time salary, go out and buy an investment. You could do that very quickly, and it would probably be in a regional area, fairly cheaply priced property. But I'm of the stance that because we can, doesn't mean that we do. And why I say that for is, yes, you buy that cheaper alternative property, but it's really going to utilize a large portion of your capital to fund that initial investment. Now, if your goals and aspirations are in business, you've got this very unique opportunity that, you've got a 3D printer that you currently have, you're in the content creation industry, and you've got this $100,000 that you've allocated. If I was in your position, I would focus in the investment on yourself. I would focus on the ability for you to really grow your income, because being the age of 23, you've got a great future ahead of you, and you've got a substantial amount of property and wealth that you can create. But if you can start by getting your income up to be a lot higher and focus sometimes a little bit of your capital and time on your business, and that means that it's really identifying and understanding the level of income that this 3D printer can make for you. It's identifying and understanding the customers that are out there that you can start to utilize, that you can start to attract to your business, and then ultimately you're going to be able to make more money. Once that money starts coming in, then it's going to give you a lot more doors that you can open. And those doors are the doors of wealth, the doors of wealth creation. So have you started the business plan for the 3D printer? Do you know what your costs are to produce a product, or do you know what your target market is? Have you thought about that, Jarrod?
Yeah, so I found a lot of demand for 10 to 12 inch statues. And I found that demand myself as I was looking to purchase one for my own benefit. Mm-hmm. And I found that it was cheaper to start producing them myself than actually starting to pay the money to buy them, just to own.
Brilliant.
So I noticed that there was quite a bit of demand, quite a bit of on the website that typically sells these products. You can see how many are bagged and how much is sold recently and the revenue that they're producing. Mm-hmm. And I thought, well, if instead of paying that money just to own one myself, if I can teach myself how to produce those products, there's an audience there that are willing to pay that kind of money for them, that it might make the most sense to start to start producing them myself and target that audience.
So, Jarrod, what you've done without realizing it, you've started your business plan. We try to look at what other people want, but we forget what we want as well. Now, by looking at what we want, I can almost guarantee you that there's many other people that want the same thing. So Jarrod's had a look at what he wants. Jarrod said, well, there's a demand because I wanted to buy 10 to 12-inch statues. That started and piqued his interest. And then he started to look at other suppliers that are out there and what they're selling for. So, Jarrod, you've started your business plan. Moving forward from that now is you need to really understand what the costs are involved of purchasing or even building these, 10 to 12-inch statues utilizing your 3D printer. Once you start to solidify what your costs are, then you can start to work out, well, what can I potentially sell them for based upon the market, based upon what other people are selling them. Now, once you have that in place, then with your capital that you have, you can start to formulate a plan of what I'm going to set aside for the creation of this business, for the creation of these products, for the growth of this statue business. Now, it might mean that $20 or $30 or $40,000 needs to be allocated to producing the initial batch of statues that you make. And if you can roughly identify what the level of revenue that you're going to generate, less the costs involved, all of a sudden, Jarrod, you've made profit. And that profit doesn't necessarily all have to go back into, recapitalization of your business and further investment. Some of that profit can be now taken off the table for you to start saving and allocating towards other things. So what I'd be recommending in a situation like this is not necessarily saying, well, I'm going to deplete all my capital and continue making my 30 or 40 grand. Your goals are very specific. You've bought this printer to make revenue. You've got your business plan already started with understanding identified market, with understanding potentially identified price, and you've got already the skills in the industry, being a content creator or having skills in the content creation industry, to be able to utilize that to make money. What you need to now would be doing next is you need to start really knuckling down on your numbers, knuckling down on your costs, knuckling down on your cost to distribute, and taking any variables into consideration. Once you've identified that, Jarrod, all of a sudden you now have a plan in place, and it's the execution of that plan. It's how many units that I'm going to produce, and you might want to diversify your units to work out what sells initially first. And once you've identified what sells initially first, then you can really start to ramp up the capital that's required to then facilitate a number more of these statues being built. One of the biggest lessons that I learnt, Jarrod, in business and also helping many other people in business as their accountant, is the fuel for business is capital. Without capital, you tend to struggle, and most businesses will fail. The statistic's quite high, Jarrod, so don't be alarmed by this, but most businesses will fail in the first 2 years or 3 years, and that number's around about 50%. Now, businesses don't fail because there's not a consumer for it. Businesses don't fail because there's not money that they're making from it. Businesses fail because they fail to realize the capital that's required in the initial years. So if you can utilize and put aside some of this $100,000 that you've saved up, I think you've got a really good business there to take into the future, number one. Number two, not only with that business, but you've got some potentially good profits that you can make after really knuckling down your numbers that can produce you more income and potentially more borrowing capacity. And then, you know what? You can start that property portfolio off on the right foot with buying a good property you want to buy, as opposed to a good property that you can only buy given your circumstances. And I think that's the main thing to learn from this, Jarrod. It's when you can only do something, you're really hamstrung in one direction. But when you can really identify a number of different alternative options, and again, it's all about evaluating your options. If you can really identify all those alternative options, what you've got is choice. More choice gives you more doors that you can open, Jarrod, and more doors that you can open will ultimately lead to more wealth. So you're in a really good wicket, mate. I think you need to really hone down those costs. I think you need to allocate a large portion or some portion of your $100,000 worth of capital. You need to get the process moving. And often one of the sayings I say is progress is much better than perfection. So get the ball rolling, because there'll be lots of things that will change. You'll pivot. You'll change your strategy a couple times, and that needs to be done in line with what ultimately you're aiming to achieve. And moving forward, if it doesn't work, don't treat it as necessarily lost time or lost money. Treat it as an education. Treat it as a learning curve, because ultimately what it will do is next time when you do it, you're going to be able to do it very well. The last comment I'll make, Jarrod, is document the whole process. Document the whole process so you get a really good understanding of everything that you've done, so you can reflect, look back at what you can improve, or look at what has been done really well, where you can amplify it and take it to another level next time. Jarrod, I just wanted to make sure that you understand what we've spoken about today. Can you give me a little bit of now your next steps moving forward?
Absolutely, that was really helpful, and you're right. It's one thing to have a bunch of capital and a business idea, but without action, a plan, and how that revenue and profit will be generated, it's not worth anything. So my next step will be finding that market and honing in exactly where those products will be delivered to, what my costs are going to be, and how that profit will be generated. And then from that point, where can we scale it and introduce that capital that I've saved up to really take that business to the next level.
Beautiful. And mate, more capital means potentially more savings. More savings mean more wealth you can create. So that's where it's really going to take you into a new direction. And I wish you all the best. I think you've got a great idea and you've got a very bright future ahead of you, mate. Well done. Thank you very much for calling in, and I really appreciate your time.
Thank you so much.
That was a great call by Jarrod, and I really think it's important that you can have those people that can be a sounding board for you. Understanding all your options and giving yourself a bit of an opportunity to get the foot moving in the right direction is always required. And there's many times that I always go back to make sure that I'm starting off on the right foot. So I'd probably recommend that if you do have any questions or queries, please feel free to comment in the Instagram, and would love to find a way to be able to have a chat with you and see if we can assist you with your queries and evaluating your options and hopefully getting you off to the right step. But I just wanted to knock off a couple little things. You know, we spoke to Jarrod, he's built up his capital, he's been told by many friends and family around him that he should be investing in property, but given his circumstances and his ambition for business, that capital that he's built up, that's the fuel for his future. And if he was to buy a property, it'd probably not be one of, I would call it a great investment, because the purchase price might be relatively low. And again, it comes back to that notion of just because we can doesn't mean what we do. He has just got such a long time ahead of him that he has a bright future to be able to invest in multiple assets, but the timing needs to be right. And I think in Jarrod's circumstances, his ability to fuel his business aspirations with capital is going to get him to where he wants to be a lot quicker compared to if he was going to invest that money straight away into various investments. So you might not have $100,000 like Jarrod. You might have 1,000, 5,000 or 10,000. But the reality is that the money that you've worked hard for and saved, you need to make sure that it's working for you the best possible way. Not necessarily does it need to be invested all the time at all times, but it needs to be moving for you. It needs to be making and having a purpose. So in those particular situations, don't feel that you need to have 100,000. Sometimes I've seen businesses start off with a small capital investment of 10,000, but the reality is they start off, and it's getting the foundations right. As we went back into prior episodes, foundations are important. They're the building blocks for success, and if you can get those blocks in early, success becomes very easy. It doesn't come without hard work, and I'm sure Jarrod's got a long road ahead of him of building many 10 to 12 and 14-inch statues. I think it's important that he started the right way, which is getting a good understanding of his target market, getting a good understanding of the capital required to fuel his business, and who knows, we might be seeing Jarrod's advertisements very soon. This is just another lesson about what school should have taught you, about evaluating your options. I'm Jeremy Iannuzzelli. See you next week.